Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on Bitcoin. We saw a major breakdown of the technical structure on Bitcoin over the last couple of weeks. We failed to anticipate that drop. We called for a low at around 53K here. Once that trend line that we were watching gave in, once it was broken here, we saw a major liquidation event on Bitcoin here. There was a lot of leverage built up on Bitcoin that was liquidated in this crash here. If you were watching the chart on BTC, in just a couple of hours here, we had a major 20% drop here. That is leverage being liquidated off the market. This was not part of our expectations. Now, making mistakes in trading is going to happen. That's part of the job, especially on a volatile asset like Bitcoin, where you have these types of crazy moves up and down, 200% up, 50% down, 30% down. You are bound to get some unexpected moves. That's something that crypto traders and investors absolutely need to understand. But the most important part of trading is looking back on your mistakes and learning from them. Because if we can systematically learn from our mistakes, we become stronger traders and we can prevent that mistake from happening again in the future. I think most traders and investors are still discovering Bitcoin, still discovering how it behaves, and we are definitely looking to learn as much as possible from this journey. If you're interested in doing that with us, make sure to smash that subscribe button. Now, in this video, we're going to take a look at two very important things. First of all, what we did wrong. What did we not anticipate that we could have seen to predict this move down on Bitcoin? And then most importantly, does this technical breakdown here change the bullish thesis for Bitcoin? There's a lot of fear in the markets right now. So many people on Twitter, on YouTube, on podcasts calling for this to be the beginning of a much larger move down. Has price gone too far down to continue being in a bullish structure? We're going to talk about all that. And now, without further ado, let's get right into it. All right, so the first most important thing that we should have been paying more attention to is the macro environment, right? If we jump to a weekly chart, right, it's easy to come up with the idea that Bitcoin is this wonderful, unique, uncorrelated asset that goes up and down on its own terms, that's not correlated to the stock market and is not affected by the macro environment. That's what a lot of traders out there talk about. That's a big narrative. But if you've been watching our videos and our understanding of Bitcoin and how it behaves in the financial markets, that couldn't be farther from the truth. The macro environment has a massive influence on Bitcoin. If I just add this chart of the 10-year yield on top of Bitcoin, right, this is the yield on 10-year treasury bonds. And I'm going to do some oversimplification here, but in general, when you see the 10-year yield go down, that's a risk-off move because that means that bond prices are rising and that capital is going into safety assets like bonds, like gold, and away from risk-on assets like stocks, right? So periods where yields go down are typically periods where the S&P 500 and more aggressive plays underperform. But when you have the yield go up, that's when they outperform. Because when yields go up, it means bonds are going down. It means capital is coming out of the bond market and into other riskier assets. Remember, the bond market is the largest market that exists. So if money is coming out of the bond market, you want to be paying attention to where it's going. So let's talk about this correlation. This is the 2012 to 2014 bull run on Bitcoin. What were yields doing? They were going up. Then between 2013 and 2016, yields were going down. And that was the 2014 bear market. Then 2016 to 2018, yields were going up. Bitcoin was going up. Then 2018 to 2020, yields were going down. Bitcoin was going down all the way till that 2020 low on the 10-year yield corresponding to that 2020 low on Bitcoin. And guess what happened after that? Yields went up and Bitcoin went up. So it's absolutely essential to look at the bond market, to look at yields when you're looking at Bitcoin. If we zoom into that daily chart of Bitcoin, you can see even very recently, this correlation sticks, right? It's a perfect positive correlation between yields and Bitcoin. And what have yields been doing recently? They've been going down here. And this is what triggered the breakdown in Bitcoin. It was the move down in yields here. Now, if we look at the actual technical structure on the 10-year yield, we were at resistance here. This was a resistance level that we were looking at with our members on gameoftrades.net. And we got rejected off the resistance level much before Bitcoin started to break down. So this could have been a major warning signal, not necessarily to predict the move down on Bitcoin, but to be open to the possibility of seeing downside on the asset. All right, so you're probably telling yourself, that's all very nice. Bitcoin is correlated to yields, but where are yields going now? Are we going to continue seeing a downtrend in yields, which would ultimately mean that Bitcoin is going to continue moving down as well? Now, that's one of our focus points at gameoftrades.net, is to look at the current market environment. Now, this is absolutely a core part of our service at gameoftrades.net, and I like to think that that's one of our strong points, because if you know what type of market environment you're in, you know what asset to be allocated into. If you're in a risk-off environment, you don't want to be in risk assets. You want to be in bonds, you want to be in gold. But when the market flips to risk on, that's when you want to be aggressive and you want to take advantage of those opportunities. And from our study of the markets, if you're able to flop between risk on, risk off at the right moments and at the right time, that can lead to tremendous gains across the financial markets. So we do these frequent overviews of the current market environment. This was one that we posted just a few days ago where we took a look at everything that needs to be taken into account to identify the current market environment and predict where we're going from now and how that's going to impact the market. If you're interested in that part of the service, and most importantly, learning how to do all this and learning what data to look at, make sure to test out our free trial. We have a growing community of traders, a lot of fresh ideas, a lot of feedback on our service, and we're doing everything to only make it better. Now, spoiler alert, we think that the market is going to be risk on from now on. Look at where the 10-year yield is currently at. It's currently at 1.5%. That means the yield that you get on your treasury is 1.5%. Where is the current inflation rate? It's at around 6%, right? So the 10-year yield is deeply negative. And from our observations of the data, we think that number is only going to get hotter over the next few months. So just think about that for a second. Why would you be holding bonds that are just IOUs when you've got an inflation of around 6% and has the potential to continue going higher? The answer is that you don't. And that's exactly why we've had a rising 10-year yield throughout 2020 and why we're very likely to continue seeing rising 10-year yields throughout the next few months, because the only buyer of treasury bonds is currently the Federal Reserve. The rest of the market is pushing yields higher. And just with today's move, this is again the 10-year yield. This is the technical structure on the 10-year yield. Just with today's move, it looks like we're getting a nice recovery. We have a trend line here capturing these lows on the 10-year yield. And it seems like we got a nice false breakdown right here. So if we continue to see upside on the 10-year yield throughout the next few weeks, next few months, could that mean we see a nice Bitcoin recovery? It's possible, but we're going to talk about some other factors throughout the next few minutes. Now, I wanted to show you this chart here. I find this absolutely fascinating. This is a chart of a ratio between long-term holders of Bitcoin and short-term holders of Bitcoin. Right, so we divide the number of Bitcoin held by long-term investors by the number of Bitcoin held by short-term speculative investors. We've shown this chart before, and it's the idea of smart money, dumb money. And it's the spread between the smart and the dumb money. You tend to want to stay on the side of the smart money. And I'm going to show you just a couple of quick examples. Right before the summer of 2021, in around March and April of 2021, we had this major topping pattern on Bitcoin. Where was this spread at? It was extremely low here. We had a very similar type of move back in 2017 here as we had this parabolic move on Bitcoin. Look at where the spread was, extremely low. But if you look at where we were at in September 2020, right before this parabolic move on Bitcoin, the spread was high, meaning there was a lot of smart money, but not much dumb money. And so I've highlighted the green boxes here, and the green boxes only correspond to the periods where you have this ratio, the spread, come down. And those correspond to the periods where Bitcoin switch hands. They switch from long-term holders to short-term holders. And that's when you see this ratio coming down. And the reason I've highlighted these periods is because we're currently extremely high on that spread. We have a lot of long-term holders and not many short-term holders relative to previous periods in history. So we have a lot of potential for this to move down. Now, it doesn't mean it's going to move down straight away, right? You can have periods where it stays sideways for some time, or sometimes it starts going up, sometimes it starts going down, then it goes back up just to come back down again. That at one point this is going to start moving down. And when it moves down, look at the moves that it creates. It systematically corresponds to large moves up in price. Many of these green boxes correspond to moves up in Bitcoin, even violent moves up in Bitcoin. The only exceptions were right here during the 2014 bear market and right here in COVID. But they both eventually led to significant bottoms in price. Now, unfortunately, we didn't have time to go into detail into where we think Bitcoin is going in the short term. This video was designed to give you a broad outlook on Bitcoin, which I believe is necessary after such a violent move down. It's important to keep your convictions strong when you're investing in such a volatile asset. And although that's just our personal conviction, we think that a 27% discount on Bitcoin is an absolutely massive buying opportunity. Now, the next video is going to focus a lot more on the short-term price action, where we think Bitcoin is going in the short term. Now, that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to smash that like button. And now, in the meantime, I wish you good luck on your trading and see you next time.